The Canadian Agri-Food Policy Institute is driving bold policy solutions for a resilient Canadian agri-food system and building a stronger future for Canadian agriculture. Visit capi-icpa.com to discover how.
Well, let's dig in on what's going on in terms of U.S. farm policy. And joining us right now is Jim Wiesemeyer of Wiesemeyer's Perspectives podcast. Jim, how are we doing?
Pretty good. At least we've got the U.S. government back, but we need to get some more reports, both economic and agriculture, out of the way. But at least the House is back now, and we're I can't say raring to go, but there are developments here, especially on the U.S.-China front.
We had a flood of information on Friday. Is there any big tells out of that we should be aware of?
Well, on the tariff things, he had a number. I mean the Trump administration had a number of flushed out trade agreements with some Latin American countries, which were pretty good from the U.S. perspective. And he also took away the mostly 10% reciprocal tariffs on countries. Now, that still left 40% tariffs on Brazilian coffee and Brazilian meat. And I think those eventually will come off in the next few months. It's a tacit acknowledgement that these tariffs are hurting the U.S. economy. They have led to higher prices. So I think this is the answer to the biggest political word in Washington right now, Shaun, is affordability. And they know they have to get prices down, not just food, but other commodities. And they're going to do that by going back to their to the item in Trump trade policy that he should have stuck with, reciprocal policy. We'll treat you the way you treat us. Let's hope that's the case with U.S. and Canada and U.S. and Mexico eventually.
Does sort of admitting that those tariffs on beef, coffee, and bananas last week, they need to reduce those tariffs to get the prices down. It is some form of admission. Does it have any impact on that IEPA Supreme Court decision at all?
Some people will say so. I just think the Supreme Court decision, either late in December or early in 2026, will be based on the merits or the demerits of whether or not they're constitutional. And I think that's the biggest issue right now. That most Supreme Court rulings are based on, not here and now what's happening, but the underlying principle, Shaun.
This deal
it does tell you that their trade policy was not well thought out to begin with, because they should never have put those tariffs on commodities we don't grow, bananas, and other coffee. How much coffee, do we grow in the U.S.? So that was not well thought out. So it's getting to be a more sensible trade policy.
Jim, when we start messing with coffee prices, hey, as somebody that's a good 2-potter a day, I get really upset about this.
And I drink more expensive coffee to begin with, Nespresso, and so it has really affected me. I wait till they go on sale, and they don't go on sale often, and I load up.
Oh, my wife loves that Nespresso machine as well. What do we make of this agreement between the U.S. and China? We've heard about this, in the near term buying window, 12 million metric tons. The next 3 years out, 25 million metric tons per year on U.S. soybeans, as an example. Where the deal is not signed, it needs to be signed. Is this real or not? Because there's a lot of naysayers, but there's also a lot of people cheerleading with pretty strong pom-poms. So what's your breakdown of it?
Well, the U.S. says that we need to get China to confirm the tonnage levels. Now, I think the Trump administration, in particular Scott Bessent, our Treasury Secretary, who's overall been a very good Treasury Secretary, but he should have said early on that this trade agreement, this truce, if you will, with between Trump and Xi Jinping was not yet signed. that explains a lot to China watchers because it will be signed in the, I think, next few weeks, if not a month, month and a half. The reason I think it hasn't been signed is they're still going back and forth on these rare earth provisions that China is still talking with the U.S. over, and that's the issue number one between Trump and Xi Jinping. Uh, and China doesn't talk about trade agreements until they are signed. Now, as you said, the U.S. is saying 12 million tons between now and the end of the year. That's a hefty level. Some people with the around 800,000 ton daily export sale confirmed by USDA this morning. Other people say it's up to about 1.2 million metric tons. Well, we still have a long ways to go to get to 12. So that brings up the other provisions in this agreement when we ever see it. Word for word, because in the phase one agreement under the first Trump administration, Shaun, China has had an escape clause on the tonnage levels they purchased that U.S. Farm products had to be price competitive. Well, we know that U.S. beans are overpriced relative to Brazilian beans. So if they want to weigh out, they will include that one. But there will be some enforcement mechanisms because even though China didn't fulfill phase one tonnage levels in the ag area, uh, that was mainly under the Biden administration as a carryover. Trump has a little more than 3 years left in his administration. And trust me, if they don't fulfill in good faith the majority of those tonnages, if we're price competitive, Trump will react. Now, here's the other thing to watch for. Sooner or later, Trump is going to withdraw the additional 10% tariff on China for fentanyl. Remember,
Yep.
he only
Yes.
cut him by half. That's going to help U.S. soybeans become more competitive to Brazil. They'll still have about a 3 percentage point advantage, but that's going to be market popping when that happens, and they're talking about it right now behind closed doors.
Now, that 10% fentanyl tariff, that's the blanket tariff, correct? That's on all Chinese goods coming into the US?
Absolutely. Absolutely.
Okay. So that's an interesting consideration because it is making still or keeping my understanding US beans still uncompetitive compared to Brazilian beans.
Yeah, about $1.25 a bushel.
Yeah, that's considerable. If the blanket tariff is removed on China, it's think about how Japan, the UK, Canada, how they respond. Wait a minute here. Your biggest economic enemy, your number one nefarious character out there doesn't have a blanket tariff, but the rest of everybody does. There's going to be Lucy, you got some explaining to do.
Yeah, it doesn't make sense. So sooner or later, I think this country should come to its senses relative to the North American market because it's going to help them from a economic perspective as well, because the comparative advantages that all three countries have in trading with each other. And I think it eventually happen. I just don't know when. And so now, this run up, you've had a pretty good run up. You're 17-month highs in soybean prices in the United States, where a lot of my emails are coming in from farmers saying, how will this affect? Will we still get a trade mitigation aid program from the Trump administration? The answer, I think, yes. But remember, for weeks, USDA Secretary Brooke Rollins and Senator John Hoeven from North Dakota Appropriations committee kept saying, just as soon as the U.S. government comes back, the White House and USDA is going to announce a trade mitigation program. They haven't announced it. I think the variables have changed relative to the price enhancing moves we've seen on some commodities, but not nearly as much for other commodities versus soybeans, cotton, rice, sorghum, etc. So, as I said before we started talking, I'm going to judge this mitigation program on a percentage basis to see if it's equitable to the commodities other than soybeans. But I think we still will have a trade program, anywhere from $10 billion to $13 billion, primarily funded out of the Commodity Credit Corporation at USDA.
Yeah, and I've looked at some of the P&L charts per acre forecasted by USDA, and you bring up a great point, Jim, because corn and soybeans take up all the oxygen in the policy room. Let's be really honest about that. But some of the biggest losses per acre, you point out cotton and sorghum. That's where the real hurt is. The biggest losses per acre that are being realized or forecasted in the 26 cropping year. And those prices have not moved to the same extent. So
no, look at sorghum and or milo. They also relied a lot on China in the past. Now they haven't purchased. They have purchased some, but minor amounts. So they're beholden to China. Cotton. They export 80% of their crop.
yeah,
I give a lot of speeches like you, and I'm telling you, cotton is in a world of hurt. They're right around 62 cents, where they had been 90 cents or higher when they had the China market. And cotton has a long-term problem in the United States because of this truce with U.S. and China is just a truce. Long term, no U.S. commodity should count on China because we're in a
yeah.
geopolitical long term competition and battle with them. So that's why trade policy, we have to expand it to other countries.
So don't you think that the soybean acre should pay attention to the cotton acre and see the realities there and look across the fence? And I say that from the standpoint of there could be a little bit of that's what the future potentially looks like if things don't change. What is the impact on the soybean acre in 26 if China does not meet this 12 million metric tons that are being discussed, and we're not off to a really good start in Q1 from a shipping standpoint on containers to China? You got to sort of scratch your head and wonder, man, I wonder what's going to happen with beans in 26. And I don't want to be a negative person, but I think that's a bit of a thing to be looking at here.
That's just reality. Yeah, that's going to make the corn soybean battle even more important. And as you said, the cotton acres, some of those acres could go to corn. Sorghum, clearly, if they don't have a price run up here, about 1 to 2 million acres of sorghum will be going to corn in states like Texas, Oklahoma, and other states. So corn could eventually have a planting problem. I mean,
Yeah.
not right now. We have record corn exports and still prices, I won't call them very low, but they're not above the cost of production of a lot of producers. So we have some things going on. And look at pork. U.S. pork still has the 25% tariff coming on them on top of the other tariffs as a result of the China reaction to our tariffs on their aluminum and steel. And that's not going away anytime soon. So U.S. pork exports to China, not good. And wherever I go to speak, I have hog producers come up to me and say their issue is the USMCA. Because if it doesn't continue, Mexico will retaliate against the U.S. And the first thing they always do is to retaliate against U.S. hams. That's what history clearly shows. And they're nervous about that.
Jim, I'm telling you, there are a lot of things, and I'm preaching to the choir here, but there's a lot of issues around the world. I do not understand why in the North American, with that USMCA deal, why we're fiddling with that at the same time. And I know we do need to review it. It absolutely should be reviewed. But there seems to be some stubbing of our own toes here at a time that can't afford it.
Yeah, the U.S. Trade Rep Jamieson Greer and Trump clearly want some harder language for Mexico relative to Chinese cars getting end arounds coming into the United States. Well, I think Mexico will probably agree to that. I'm not quite sure, but that's one of their biggest areas. For Canada, I just cannot totally understand. It's a it used to be a personal issue between your former prime minister and Trump, but I think he likes your current one. So
Yeah.
I still don't, every time they think it gets close and then something, one of your officials said something that upsets Trump. But we have to get back to a North American market. Bottom line.
Well put. Well, to wrap up, it sounds like there is likely to be some sort of ad hoc programming farm relief package, even with the China deal. But the key here, you mentioned this, to pay attention to how are those funds distributed across the different commodities. That's an important pull away from our conversation.
Absolutely, because it has to have some credibility. And the price run up, soybeans are probably going to get less payments than they would have had it been announced 3 weeks ago because of the price run up. That's just hopefully common sense 101.
Absolutely. We've been talking to Jim Wiesemeyer of Wiesemeyer's Perspectives. Encourage you to check out his podcast, Jim. It is always a true treat to have you on the show here. Thanks so much.
Anytime.